Okay, it's live streaming now. Hey Jordan, what's up?
Hey, can you hear
How you
me?
doing, man?
Pretty good. Good to
I
see
like the
you.
beard.
Are you expecting a decent turnout?
We had 10 people register, so hoping so. Got a couple people just coming in.
Cool. We're just walking the dog. I'm gonna.
Yeah, no worries. I'm gonna mute you. I'm gonna get started here. We're recording this. Okay. Let me share my screen. Okay. Jordan, can you see my screen? Either Jordan, I guess.
I can see it.
Okay, perfect. All right, so today we are going to talk about how to buy your first home. And this information is 95% of it is going to be anywhere in the entire US, and about 5% of it is going to be specific to Texas. So we're going to go over all the different processes and what to look for and just how to buy your first home. So who am I? My name is Connor Olson. I'm a realtor and I'm a real estate investor in Austin, Texas. Here is my contact info if you want to get in touch with me and ask me any questions. So, a little about me. Again, real estate investor. I am very passionate about helping people get started purchasing their homes and build wealth through home ownership. So, congratulations. You are at the first step. You're interested in purchasing a home. So, that is huge. It's a big life decision, and we are going to walk through it today. So, here's what we're going to cover today. There are a lot of fears and facts about buying a home. We're going to go through different scenarios, different misconceptions about buying a home. We're going to talk about today's market. Things have changed a lot this year. There's a lot of news swirling around about different things in the housing market. We're going to talk about all of it. Then we're going to go over 10 steps to buy a home to become a homeowner, and then the next steps. So, jumping right in. Here are fears and facts about buying a home. So, biggest conception I see constantly, is that you can't afford to buy a house. And a lot of times people don't know that. You have to talk to a lender and they will tell you how much you can afford, and they will tell you if you can afford to buy a house in your current financial situation. I've talked to people who thought they could afford like a $200,000 house and they got approved for like $400,000. So it is a giant misconception, and you don't know until you talk to a lender. So that's one of the steps that we're going to go over with. Some other fears: I should wait until the market gets better. There is never, ever a bad time to buy a house. Even if you bought a house at the last peak in 2006, 2007, still a good time to buy a house if you plan on living there for a long period of time and you like the house and it's good for your personal living situation. I don't have enough money for a down payment. There's down payment assistance programs that we're going to go over. Can't afford to buy the house because my credit isn't good. There's always options, and there's always ways to improve your credit. I can't afford to buy my dream house. Well, if you're looking to buy your first house, it's not going to be your dream house. The goal is to get in, and then over time, you can afford to buy your dream house in the future. I should wait until I'm certain about my future. Some people want to wait till they're married, have kids, things like that. You don't have to wait. You can definitely buy a house now, and then that gives you more options if that comes into your life in the future. Buying a house is complicated. It's not easy, but I'm going to go through it in an hour and we're going to talk about it. I should pay off my student loans before buying a house. Student loan debt does not eliminate you from buying a house. You can still have student loan debt and buy a house. Okay, so why would you buy now? So here's just some facts about the market. Interest rates right now are around 7%. They've gone up a lot over this past year. Some reasons to buy a house is it's a long-term investment. It is a great way to build wealth without even trying. Like, you buy a house, you move in, you live in it for 10 years. And then when you decide, it's time for a change, you go to sell, you realize, wow, I have so much equity. I'm going to make a huge profit on this. So there are multiple levers. Your value of the house goes up. You pay down the mortgage. And so that is how you have equity in the home. You do get pride of home ownership. There are tax benefits to buying a house. A lot of people overlook that. It is very convenient when it comes tax time and you start getting those deductions. Stability and security, this is huge, especially right now. Rent growth in the Austin market, where I'm located, has been about 30%, 20 to 30% the past couple of years. I know tons of people, and I talk to renters constantly, that are getting priced out of their homes and having to move elsewhere, having to move further out of town, or even having to move to San Antonio altogether just because they can't afford the rent payments. If you buy a house, you lock in the payment and it's more stability. It's nice not to have to move for the foreseeable future if you buy the right house and you can afford the payments. So if you guys have any questions throughout this process, just send the message in the chat. At the end, we will go over a live Q&A with anything that you guys want to talk about. Okay, so owning versus renting. This is very important to think about. If you were to buy a $250,000 house and you paid $1,200 towards your mortgage, over 30 years, you're going to be paying $432,000 for that home, right? So you're paying off the house of $250,000, but then you also have interest of another $200,000. That seems pretty daunting, right? Who wants to pay double for the house and what it's worth today? But that house that you buy at $250,000 after 30 years with a very conservative 3% market appreciation, that $250,000 home today is worth over $600,000 in 30 years. So you're effectively paying $400,000 for a $600,000 asset. So it's really important to not just think about the interest you're paying right now, but also look big picture to think, where's it going to be in the future? If you were going to rent and you're going to pay $1,200 a month for the next 30 years, you're still going to be paying $432,000 over the next 30 years, and you own nothing. So the home ownership really has built the middle class over the past, 50 years. So it's very important to be thinking about where you want to be in the next 10, 20, 30 years when it comes to home ownership. Okay, why would you hold off buying a house? There are valid reasons to hold off buying a house. If you're changing jobs, absolutely, might want to hold off. If your job isn't super secure and maybe you think layoffs are coming, the last thing you want is to tie yourself down to a payment that will potentially hurt you in the future if you lost a job. Your credit score, or you didn't have a down payment. If you don't have a good enough credit score, you might get slapped with a high interest rate. If you don't have a down payment right now, maybe you should hold off. Those two things are fixable. So just because you can't afford one today doesn't mean you can't in the future. I work with Jordan Moorhead, who's also on this call. He talked to a lender 4 years before he bought his first house. So he came in with a lender and he had like a 500 credit score and no down payment. And the lender said, you do these things, listed out everything, and you can afford to buy a house in the future. He did those things. It took him 4 years, but over time, he got the down payment, he got the credit score there, he was able to do it. So those two things are fixable. You do not want to buy a house that is too expensive. So being house poor is absolutely a thing. That basically means that you buy a house, all your extra income goes to the house and you don't have enough for your everyday expenses. You can't live in the house properly, like you can't furnish the property, you can't take care of any maintenance. Absolutely, you want to make sure that you can afford it. And if you're looking to own a property for the short term, I do not recommend you buy a house. The rule of thumb is you want to own a house around 5 to 7 years in order to break even for the cost of purchasing and selling a house. It's very expensive to purchase and sell a house. And if you hold on to it more than that 5 to 7 years and you plan on staying put for a while, absolutely a great idea. If you plan on being there for 6 months and you want to buy a house and sell it in 6 months, do not do it. Don't recommend it at all. So, valid reasons of why not to buy a house. Okay, here are the realities of the Austin housing market. The average home price, this is actually the median home price right now, is $590,000. The average home price is $475,000. The interest rates have gone up recently. They're around 7%. It is a buyer's market right now, and there is a 3% appreciation that we've seen year over year as of October last year to October this year. I want to take a minute and talk about the buyer's market versus a seller's market. So what this means is who has the leverage right now? Who is getting what they want in a home purchase transaction? Right now, it is the buyers. The buyers are having more negotiation power, and the buyers are getting exactly what they want. So that is definitely something to think about. People want to go back 12 months when everything was going crazy. But guess what? The sellers were getting 10% over asking and 45 offers within the first 5 minutes. The seller can do whatever they want. Right now, it's switching to the buyer's favor. So it's really important to make sure that you think about purchasing a home when you have the most leverage and you can get what you want and you can make the purchase at the time that is the best for you, and that you can negotiate for the most things and you can get the right house at the right price. Okay, 10 steps to home ownership. That's it. Just 10 steps. We're going to go through all of them. You got to decide to buy. You're going to find an agent, financing criteria. You're going to find the home, make an offer. You're going to do your inspections and your due diligence. You're going to close. You're going to move in, and then you are going to enjoy service for a lifetime from your real estate agent. Step 1, decide to buy. So homeownership lays the foundation for a life of financial security and personal choice. What I am very passionate about is that it gives you options. There are so many options that you can have if you have a home that you lived in for an extended period of time. Like, for example, my grandma is in her late 70s and she now has to go to a nursing home. She owned a home and she paid off that mortgage over 30 years. And when it was time for her to go into a nursing home, she sold the house and now she has money for her to go to a nice nursing home. How are you going to do that if you're renting constantly? You know, it's an investment and it can definitely pay off in the future in ways that you don't even think about. When you're in your 20s, 30s, 40s, and you're thinking about buying a house, you're not thinking about going to a nursing home, right? You're thinking about what you need today. So it gives you options. Okay, equity is an important topic that's misunderstood. Equity simply is the value of the house minus the loan. So let's say you own a $100,000 house and your mortgage balance is $50,000. So that means if you sold the home today, you would have $50,000 in your bank account. That is equity, right? So equity will change for 2 reasons. One, the value of the house will go up. So your $100,000 house might be worth 110 in a couple years. So the value of the house goes up and then your loan balance goes down. So as time goes on, you pay down that principal. You have 2 conflicting forces working for you. So closing day, you have very little equity. You just have the equity that you put down. It takes about 20 years to pay off half the house. And then by year 30, it's totally paid off. So step 2 is finding your real estate agent. So as a real estate agent, I help people buy and sell homes. So as an agent, my job is to educate buyers about the current market. It's very important that you find an agent that knows deeply about what is happening in the current market. They need to analyze your wants and needs. You need to tell them, I need a 3-bed, 2-bath. I need a big backyard because I have 4 dogs with me. I am expecting a child coming. We want a family of 5. Like, you need to tell the agent all that information. And then it's our job to interpret what you're saying and try to find you a home that fits that your housing needs of right now and in the future. Then an agent's going to show you the homes that fit that criteria. Then as an agent, we talk to other professionals. So you're going to need a home inspection. You're going to need a lender. You're going to need a title company. My job is to provide you with that. We have contacts, we have resources in all these different aspects of real estate that we give to our clients. For example, today I spent 4 hours calling different service providers for different things, anything real estate related. I talked to lawyers. I talked to pool cleaning companies. I talked to cleaners. I talked to painters. I'm building up a list of anyone and everything that you can need. So if I have a client that says, hey, we need a new roof, I'll say, okay, great. Here's 3 options and they're all great. You can choose one and go from there. So real estate agents have tons of information and resources. So it's really important that you pick one that has good resources to give to you, because I mean, you don't want to find out later that your roofer sucks. Might as well just ask us, because we have all the recommendations. So then we negotiate on your behalf during, putting in offers and that sort of thing. And then we solve any problems. There are lots of problems. There's always problems in every real estate transaction, and it's our job to solve them. So one of the first things that you're going to do when you start meeting with the real estate agent is that they are going to ask you to sign a buyer's representation agreement. What this is just an agreement saying that the buyer agrees to work with the agent. It's just a commitment between the two of them. So a lot of buyers like to shop around different agents. They like to, what we call dating different agents. They'll go see a couple houses with this one. They'll go see a couple houses with this one. You can spend time on different buyers, but if they don't commit to you, you don't commit to them, right? So it's very important to get a buyer's representation agreement signed so that you're both committed. So kind of think of it like a relationship. Do you want to be dating someone, or do you want to be married? And then another big aspect to the buyer's representation agreement is legally, if it is not signed, the realtor represents the seller. So think of it, it's really kind of backwards, but if I am showing a home to someone and I do not have a buyer's representation agreement signed with that person, legally, my fiduciary duties are tied to the seller, not the buyer. Once I have an agreement signed with the buyer, then I can legally represent them, and then I put their best interests forward. So very important to sign a buyer's representation agreement so that you pick your agent and they pick you, and everything works out. So very important to commit. Also, because agents, we are commission based. So, I have spent a dozen hours showing people houses for them just to go pick another agent. It sucks. So when to hire an agent? Great topic. So there is a timeline of when is the ideal time to start looking for a home, right? So people typically try to do this around when your leases expire, because it costs money to get out of leases. People don't want to break them, so they try to time it correctly. And what people kind of think is, my lease expires, where are we? We're in November. My lease expires the end of November, I'm going to start looking now. My lease expires the end of December, I'm going to start looking now. Definitely do not recommend that. So we're going to start at the end and work our way back. So let's say your last lease payment is the end of June, right? So June 30th. That means this is the end goal, right? So you want to be moved out by June 30th. So that means you need to move into your house, preferably 2 weeks before. So middle of June, you need to start moving into your house. Maybe it takes some time. June 15th to June 30th, they're going to move into your house. That means you're going to take ownership at June 15th at the latest, right? When you go under contract, you put in an offer on a house and the offer is accepted. Typically, it takes 30 to 45 days for you to purchase the home. It takes that long for the lenders to make sure you're qualified to buy the house. Title companies have to make sure the house, is actually owned by the sellers. So there's processes that take a while. So 30 to 45 days. So let's just say 45 days. We were at June 15th. So now 45 days goes, 15 goes the beginning of June, and then another 30 goes to the beginning of May. So beginning of May, you need to be under contract. When you start looking, typically it takes 2 to 3 months to buy a house. So we were at the beginning of May. Now let's go forward 3 months. That's the beginning of February. Okay. Then you need to get a pre-approval. So a pre-approval takes a week, sometimes 2 weeks. Doesn't take super long if things are very straightforward. If you have a complicated financial situation, it could take longer. So we're at the beginning of February, let's say the end of January for pre-approval. Let's say you have some finances that are not super great. Let's say you have credit card debt, you have a car loan, you have recently changed jobs, you have student loans. There's just a lot going on. You might need a couple months to clear that up. So let's say you take 2 months to do that. So we were at the end of January. Let's go forward, 2 months to the end of November. So that means if you wanted to purchase a home, definitely by the end of June, because that's when your lease ends, you need to start working with an agent in November. Right? And this timeline is fuzzy because it depends on your personal situation. Let's say your finances are fine. You don't have credit card debt. You don't have student loans if they're just normal. Let's say you find a house immediately. You find the first house you tour, that's it. Then, those timelines can shorten, but, just have enough time going into the process so you don't feel rushed. So 3, 4, 5, 6 months, right? 3 on the very, very low end, 6 months, pretty typical. So very important to think about that. So, you want to start talking to a realtor far before you actually want to move. Okay, so you need a team when you buy a house. It's not just you and it's not just your agent. There's multiple people that are involved. So the agent, someone who represents the buyer, there's an agent, someone who represents the seller, you have a lender. The lender works for the bank. The appraiser, you have an inspector, you need a contractor if there's any repairs that need to be done. You have a closing coordinator and escrow officer. Very, very daunting, right? Lender, appraiser, inspector, contractor, closing coordinator, escrow officer. I have all those people. Your realtor will have those people. So you don't have to worry about that. We recommend people. We have great relationships with them. That's on us. Okay. So there's a lot of people that fit into this puzzle, and it's important that you find a realtor that has good relationships with everyone, because this is what you need to get to closing and to purchase your home. Okay, step 3, secure pre-approved financing. This is when you're going to go talk to a bank, and they're going to tell you how much house that you can afford. So number 1, you're going to establish your budget. You're going to look at your income and your expenses and how much you feel comfortable spending towards your housing each month. That's very important because some people feel more comfortable than others. Some people don't want to spend much on a house. They want to save all their money. Some people are okay spending whatever. Totally personal decision. You need to set a budget. Then you need to talk to the right lender. Lenders kind of specialize, so it's important to talk to one that is going to meet your needs. So we have lenders that specialize in investment properties. We have lenders that specialize in first-time home buyers. It's important that you pick a lender that will help you through the process and teach you what is going on. You're going to apply for the loan and you're going to get approved. Very simple. Then you have mortgage options. There are different mortgage products, and you need to find a lender that has multiple options for you to choose from and that they can explain the pros and cons to each one. So then you will submit a purchase contract to the lender. Once you go under contract, then we're going to get an appraisal done to make sure the house is worth what it's actually worth. So let's say you put an offer on a $100,000 house and you thought it was worth 100,000, but actually it's worth 50. The bank isn't going to give you a loan for $100,000 if it's only worth 50. So they need to make sure it's worth what it's worth. It's worth what you put the offer on. And then you're going to obtain funding at closing. That just means the lender is going to pay the seller the mortgage amount, and that everyone gets paid. So those are how financing works. Again, guys, if you have any questions, just throw them in the chat. I'll try to answer them during this. At the end of this, we're going to have a Q&A. So hold your questions or just throw them in there. Okay, establishing your budget. We already talked about this. Determine what you can spend. Choosing the right lender. Again, your agent has multiple lenders. We work with 3 or 4. We recommend them depending on the person. Then they will tell you different loan products, pre-approval, pre-qualification. So a pre-approval basically says that you, as the borrower, are approved to borrow X amount of dollars. The way they figure this out is they say, you make, I don't know, $3,000 a month. You can pay $1,500 a month towards your mortgage. Then if you can pay $1,500 a month, that means you can afford a $200,000 house, something like that. So that's what a pre-approval is. They'll look at your income, they'll look at your expenses, and they'll give you a rough estimate of how much you are approved for to purchase a home. Very important to get a pre-approval because when you submit an offer, you're going to attach a pre-approval letter to it. And what that does is basically saying, hello, seller, I want to buy your house for $100,000. And this isn't just me making up $100,000. Here is the bank proving that I can afford to pay you $100,000. So here's the offer and here's the pre-approval. Here you go. I'm qualified to buy your house. So very important to get pre-approved. Okay, there are different mortgage options. So what is most important to you? Do you want a low monthly payment? Do you have a low down payment? Do you not have the 20% down that people want? Do you have 5% down? Do you have 10% down? Do you want to pay it off faster? Maybe you want a 15-year loan instead of a 30-year loan. There's a lot of different options, and it's important that you look at what's best for you. Then you're going to submit the purchase contract. So basically you go under contract and then you send that signed contract to the lender to say, hey, we're buying this house, get started on your work. Okay, appraisal and title. So appraisal, I already talked about this. It just makes sure that the house is worth what you want to offer on the house. And then title is the ownership. So basically, when you're buying the house from the seller, the lender wants to make sure that the seller actually owns the house. And I've heard horror stories where people used to go and buy houses, but the seller didn't actually own the house. So people went through the whole process, they paid all the money, and they don't own the house. So there's 2 people that claim that they own the house and neither of them actually own it. So the bank needs to make sure that you're actually buying the house. Okay, obtain funding at closing. Again, this is final approval. This is where the bank cuts a check to the seller, and the seller, you buy the house. 3 decisions when thinking about mortgages. We talked about this. Down payment, how much money do you have to put down? Your interest rate, you can change your interest rate depending on a number of factors. And how long do you want the loan? So the most common ones are 30-year loans. There's also 15-year loans. There's 20-year loans. And it just all depends on what your goal is. I know people that want to pay off their house as soon as possible. They like the idea of not having a mortgage hanging over their head. And I also know people that like the idea of drawing it out as long as possible. So it's just personal preference. There's 4 aspects to your monthly mortgage payment: principal, interest, taxes, and insurance. So a lot of times these all get lumped in together. So let's say you have a monthly mortgage payment of $1,000, and let's say 500 of that is principal, 250 is interest, 100 is taxes, and 150 is insurance. You cut a check each month to pay $1,000, and all of these things are lumped together. So principal pays down the loan balance, interest is the interest on the loan, taxes are your property taxes, insurance is homeowners insurance. And they tend to bring these all together so that you don't have to pay these at the end of the year. So property taxes and homeowners insurance are paid once a year, but it's easier just to lump it all together so you don't have to think about saving $2,000 a year for your insurance. It's just easier to do it all at once. So, okay, down payment. You can put down as little as 0% if for specific reasons. Typically, down payments are between 3% and 20%. These money comes from savings, from your jobs, from gifts from family members, things like that. So talk to your lender. You can put down anywhere between 3 and, I don't know, 80%. It's up to you. So there's a big misconception that you need to put 20% down to buy a house, and that is definitely not true. You can put down less, but your expenses end up being higher because you're technically riskier to the bank than if you put down 20%. But common misconception, I hear stories of people all the time that wait until they have 20% down, and they're saving up for years and years and years when they could have put fewer down earlier and got out of renting. Okay, when you get your pre-approval, the bank says you're pre-approved today based on your current situation. When you get that pre-approval, do not put anything on credit cards. Do not buy anything on credit. Don't get a new car. Don't get a new boat. Don't lease furniture. You need to make sure that you do not increase your credit. You can use credit cards, but you need to pay them off. I had a friend who I talked to yesterday. He was under contract with someone to buy a house, and this someone took out, they were like a week from closing, and this person whose name was going to be on the mortgage took out a $35,000 personal loan. That is a huge red flag to a bank. They ended up pushing back their closing by 45 days to get everything figured out. That person had to pay back the loan. It's just a mess. So once you get pre-approved, don't take out any new credit. It kills real estate transactions constantly. Okay, I'm gonna take a quick break. There's a chat. Is there a fixed time after pre-approval loan to finalize on a purchase contract? And when can a mortgage rate lock be made? So mortgage rate lock can be made after your offer is accepted. So typically banks will try to lock your rate in within the first couple days. And then is there a fixed time after a pre-approval loan to finalize the purchase contract? So There's not a fixed time. So you get a pre-approval. It's typically good for 90 days. And if you're still looking after that 90 days, you just get a new pre-approval. It's very simple. Oh, and Jordan responded. I didn't even read that. I should have read the comment after that. Okay, identifying your criteria. So tons of different things to think about. I've had people who want a big backyard. So we only looked at homes that are big backyards. I've had people saying they only want single story. I've had people saying that they want a minimum of 5 bedrooms. I have people saying they want to be close to the freeway. There's tons of criteria out there, and it's important to narrow it down as simply and succinctly as possible. Because if you don't, you're looking at everything. I've had people who want to see everything on the market, and there's like in Austin, I don't know exact numbers. Let's say there's 5,000 homes for sale in Austin. If you want to see everything, you're never going to buy anything. But if you narrow down and say, I want to buy in this neighborhood, and in this neighborhood, there's 500 houses, and around 10% are for sale at any given time. So there's 50 houses to choose from, and I only want 3 bedrooms, 2 baths. So that narrows that 50 down to 25, and half of those are out of my budget. So now I'm down to 12, and I'm going to watch those 12, and I'm going to see if new things come on the market, and I'm going to keep a close eye. That is so much better than taking the whole metro or just opening it up. If you can get as specific as possible, the home buying process is going to go way quicker. Step 5, you're going to find your home. So you are going to tour lots of homes if you want. Sometimes people find their perfect house on the first one, but it's my job as an agent to find out your criteria and set up tours of different homes that will meet your criteria. And then you need to weigh the different options of which one is more important. This one might be bigger, but it's in a worse location. This one's in a better location, but the backyard is small. So pros and cons, you're never going to find everything. You just need to figure out what's most important to you. So everyone's been looking at houses. It's so easy to look at houses these days. When you walk into a showing, right? The homeowners, or not the homeowners, the people who are looking to buy a home, so the buyers, they're going to go through, they're going to look at the layout, they're going to imagine where they're going to put the sofa, they're going to imagine the dining table, they're going to look at where the TV is going to go, they're going to imagine their lives in this house, right? That's your job. That's what HGTV tells us, is like, imagine yourself in this space. That is the buyer's job. The agent's job is to look at the expensive things and see what's broken in the house, so I can tell you what the condition of the house is. So I'm going to say, hey, this roof is 20 years old. It might go bad soon. Your water heater is pretty old. Might be time to replace that. It costs $1,500 to $2,000 for a water heater. Your AC unit is pretty bad. You should get that service. That's going to cost $50. Things like that. So my job is to look at the expensive things and give you an idea of the condition of the home. Your job is to see, is this going to fit my criteria? Am I going to be happy here? Do I like the neighborhood? Things like that. Okay, so we have houses, condos, and townhomes. Those are the big 3 different types of different homes to purchase. Condos and townhomes, kind of best way to describe it, a condo is like an apartment that you own. You own everything within the 4 walls. A townhome is it's a section of an overall building. So a lot of times there are multiple stories and they have a backyard. That's a big differentiation. Is a condo typically does not have a backyard, typically, and a townhome does. Typically. A townhome, you own the land underneath the property. In a condo, typically you just own the box. You just own the apartment. Pros and cons, shared walls. You have an HOA that is more involved. You have like more of a community feel. And then, cons. Yeah, you have no yard work or maintenance. You don't have to take care of the roof. You don't have to take care of a lot of the maintenance problems that arise. New construction. So new construction is interesting. One, everything is new. That's great. You don't have to fix anything for the first little while. You can pick different features if you want. There's a lot of perks right now with this current market condition. The best deals are in new construction. So if you are looking to buy a house, seriously consider new construction. And there's a lot of reasons for that. I'm not going to go into all of them. But new construction is where it's at. If I was looking to buy a house right now, I would be buying a new construction. I bought a house like 6 months ago, and I really wish I was still in the market and looking for new construction. So anyways, pros and cons, brand new neighborhood, sometimes it's not as developed. A big pro is, people are all moving in, there's more of a community feel, things like that. They have nice amenities too. They have new pools, they have parks, things like that. So step 6 is you're going to make an offer. So you find the house you want, you're going to make an offer. So big ticket items on purchasing a house. One is the purchase price. Obviously, that's really big. Terms, those are different things like when are you going to close? How long is your inspection going to be? Things like that. Contingencies are a fancy way of saying there are different ways to get out of a contract if you want to as a buyer. So, for example, in a lot of places, they have a financing contingency. Let's say you thought you could afford a $400,000 house and something happened. Let's say your spouse lost their job. Now you can only afford a $200,000 house. You can now back out of the contract and you will minimize the money that you lose by backing out of the contract. So contingencies are a way out that protect the buyers. Step 7, after you write up an offer and you get it accepted, you're going to do your due diligence, which basically means you're going to do inspections and you're going to make sure the property's in the quality that you desire. Okay, so this is in Texas. We have what's called an option period. This is synonymous with just an inspection period in other states. In Texas, you have the unrestricted right to back out of a contract during the option period. So in Texas, you say, I put an offer on this house. I have a 7-day option period. I can back out of the contract during those 7 days for any reason I want. And I will be able to get my deposit back by backing out. Typically, you're going to do your inspections during this time. So let's say the plumbing is awful and it needs $30,000 worth of plumbing. Then you can back out during your inspection period or the option period. Very important to have an option period and to get all of your inspections done quickly so that you can make an informed decision on whether you want to keep going or you want to back out. Repairs and renegotiation. So let's say you had a $30,000 plumbing problem, but let's say that the sellers are going to pay $30,000 for you to fix it. That might not be a big deal to you. Maybe you want it fixed before you move in. These are different parts of negotiation. So just because you put an offer on the house and there's a plumbing issue doesn't mean there's no options. There's always an option. You can always discuss with the sellers, figure out how to come to a common solution. Step 8, once you get past all of your inspections, we're going to get to closing. Closing is when the buyer pays to the house, the seller gets paid, and you, as the buyer, take ownership of the house. You close on the property. It's very buying, closing, same thing. Okay. When you get to closing, there are additional expenses. So let's say you're buying a $100,000 house, you're going to put 20% down. So I need to bring $20,000 to the closing table. That is my down payment, right? There's also closing costs. So the lender needs to get paid, the title company needs to get paid. There are additional expenses. The appraiser needs to get paid. So there's additional expenses that you need to account for. So let's say $100,000, you have $20,000 in the bank and that's it. You don't have anything else. then you cannot afford to close on the property because you don't have the cash, right? There are expenses, typically they're around 2%. So, $100,000 house, it's going to cost $2,000 to close on the property. So definitely important to budget for that as you start looking to buy a house. Don't say, I only have $20,000 and I'm sorry, but I can't afford to buy this house. Then you have to back out because you can't pay for it. So you have to pay those closing fees, and then you're going to do a final walkthrough to make sure the property is in the condition that you expect it to be in. And then you're going to get to closing. So when you put in an offer and it gets accepted, the lender then goes into a deep analysis of you as a borrower. They're going to look closely at your credit score. They're going to go over your personal finances. They're going to make sure you're employed. They're going to make sure your income is what you say it is. They're going to call your HR department. They're going to make sure that, if you say you only have one car loan, that you only have one car loan. They're going to go and make sure that you are what you say you are. So they need a lot of paperwork during this time. They need bank statements, credit card statements. They need balances of any loans that you have out. They need pay stubs. They need tax returns. They need a lot of documents. And it is extremely important that these documents get sent to them as soon as possible, like same day or next day, because their process is very slow and it takes a long time. So if you take a week to get something sent back, you send it off, it doesn't go to the lender, it goes to the loan officer, and then the loan officer sends it to someone else, and then that gets sent to someone else, and someone else to someone else, goes all the way down the line. So by delaying it, it just throws the whole thing off and it takes way longer to close. So it's always important to have the documents ready and just submit them when they get asked for. Okay, closing. When you come to closing, you need an ID, you need a cashier's check of however much you need to bring to closing, and you need proof of insurance. And then you're going to receive a settlement statement that's going to be given to you by the title company saying that you bought the house, here's all the expenses. You're going to get the title of the company, and then you're going to get keys. Step 9 is moving into the house and protecting your investment. So it's important to do proper maintenance on the house. Houses deteriorate over time. If you don't replace the roof when you need a new roof, then you can get mold in the house. There's always maintenance that needs to be done on houses to make sure they're in good condition. So one way to make sure that things are maintained properly is to get what's called a home warranty. And this is basically an insurance policy that protects appliances in your house. So this insurance policy will protect your AC unit or your water heater or your furnace. So let's say your AC unit goes out. This home warranty or insurance policy, you file a claim and they can send someone out to repair it, or if it's broken, they can send a new one to be installed. So it's important that for these big ticket items, that if you don't have the cash set aside, that you can get a home warranty. You can make sure that you're always going to have AC, especially in Texas. It's important to have AC, or your water heater, or your fridge, or your dishwasher, or your stove. That's a really good way to protect your investment of the house. Again, you need to maintain the house. You got to keep an eye on it. Sometimes there's leaks, roofs eventually fail, and sometimes you get bugs coming in, and there's just, you just got to keep an eye on it. Step 10, enjoy service for a lifetime. Service, what they mean, what service for a lifetime means is service of a realtor. So like I said, my job as a realtor is to have a contact for everyone that you might need. You need someone to clean your pool. You need pest control. You need I don't know, you need someone to trim your trees, you need someone to mow your lawn, like reach out to a realtor and they can give you that information. So the relationship between a realtor and a buyer doesn't end at the closing table. It is important that it keeps going on and that you reach out if you ever need anything. So these are the 7 things that as a realtor we do: educate, we analyze your needs, we find homes that fit your criteria, we coordinate with other professionals, we negotiate, we double check all your paperwork, and we solve any issues. Here is my contact info. If you have any questions, feel free to reach out. I am here to answer all your questions. If you want to set up a 30-minute meeting with me to just talk about your current situation and whether it's the right time for you to buy, definitely just shoot me an email, connor@themoorheadteam.com. Doesn't matter if you live in Austin or somewhere else, I can still give you some advice on what I think you should do. And then also, if you don't live in Austin, but you still want to buy a house, I have a network of agents throughout the country. So if you live in Florida, just say, I have realtors in Florida that I work with, so I can send you their contact info. So I have a very big network of people throughout the country. So if you need someone somewhere else, just let me know. And that is it. All right. I'm going to stop presenting. That was a lot of information. Does anyone have any questions? This is time for Q&A.